Okay, one thing before we get started with the video is that if you are interested in purchasing this indicator in return for you taking your time for watching this video today, you can send us an email at daytradinggps@gmail.com to request a discount promo code to purchase the indicator at the link you see below, which is wap.com/NDX indicator. Thank you. Okay, another thing just to point out before we start the video, you'll see in the description of this video, underneath the video and the YouTube, you'll see in the description links to descriptions to other videos on different topics about the SPX Daily Key Levels V2.0 indicator. So please note that even though these videos are concerning the SPX Daily Key Levels V2.0 indicator, the same things pointed out in these videos on specific topics concerning the Daily Key Levels indicator, they also apply to the Nasdaq NDX Daily Key Levels V2.0 indicator. We haven't had time to make these videos again just specifically on the NDX Daily Key Levels indicator, but all the things discussed in these various videos would also apply to the Nasdaq NDX Daily Key Levels indicator. Thank you. Hello, in today's video we'll be taking a look at the Nasdaq NDX Index for Tuesday, November 25th, 2025. We'll be utilizing the Nasdaq NDX Daily Key Levels indicator, specifically the V2.0 version of this indicator, which was just released today. So we had, prior to this, our standard Nasdaq NDX Daily Key Levels indicator, but now we have upgraded this indicator to the V2.0 version, which makes it just like our XPX S&P 500 Index V2.0 version. Okay, so some of you may be already familiar with how our SPX Daily Key Levels V2.0 indicator works. This Nasdaq Daily Key Levels indicator works the same way as the SPX version, except it works on the Nasdaq NDX Index. So at 9:30 a.m. Eastern New York time, on the first tick of the New York open of the Nasdaq NDX Index, you will get your daily key levels updated on the NDX chart. So on TradingView, you would go to your symbol search and you would type in NDX, and then you would look for NDX under the Nasdaq exchange, and that is the official Nasdaq NDX exchange that everyone follows as far as the NDX index. This symbol also works on the NDQ 100 symbol, which is a Forex CFD. On TradingView, you would type in NDQ 100, and then you would look for the NDQ 100 symbol under the 8-cap exchange. So it is NDQ 100 under the 8-cap exchange. If you don't trade NDX options and you instead trade the Nasdaq index through a Forex broker, then you would utilize this indicator on that particular NDQ 100 8-cap symbol. Also, if you're taking a trading challenge through one of the many Forex-based trading challenge companies in which you can pay to take a trading challenge, and if you make a certain amount of profit in a certain time period without violating a daily loss limit or total account challenge loss limit, then you can qualify to get a funded trading account with one of those trading challenge companies like FTMO, the 5%ers, Apex, and there's about 60 or 80 other ones of those. So if you're trading through one of those trading challenges, then you could trade utilizing this indicator on the NDQ 100 8-cap Forex CFD version of the Nasdaq NDX Index. Also, just like with the SPX Daily Key Levels indicator, you can get the levels for the Nasdaq NDX index 30 minutes before the 9:30 a.m. open as the NDQ 100 8-cap trades in the overnight and in the pre-market versus the Nasdaq NDX Index does not trade in the pre-market and opens at 9:30 a.m. So if you utilize this indicator on a second chart on the NDQ 100 8-cap symbol, and you open up a second chart with that symbol, then at 9 a.m., 30 minutes before the Nasdaq NDX open, then you will get the levels for NDQ 100 8-cap, but you will also get a second table like this table you see here, which will show you the levels for the current session for Nasdaq NDX, except you'll be getting them at 9 a.m. 30 minutes before it opens at 9:30. The reason for that is that with PineScript TradingView programming language, if the particular symbol you have your chart on, such as in the case with Nasdaq NDX, is not open at the time that your indicator knows what the levels will be at 9 a.m., which in the case of Nasdaq NDX it is not open until 9:30 a.m., then the only way you're going to be able to get the levels before the open is through having a second chart open on the Nasdaq NDX, which with this indicator you can do that, and then you can see the levels for NDX 30 minutes early and get sort of a jump on the session before it opens. But in any event, when you have your indicator on the symbol that you see now on the chart, the NDX Nasdaq index, the first tick of the 9:30 open, the first second of the open, basically you're going to get the levels on your chart as you see now. So as you can see on the chart now, we have the R2 through S2 levels, including the YDL level. The Nasdaq key levels indicator, the default levels are going to be R1 through R6 above the Nasdaq NDX Bull Bear KPL level, and S1 through S6 below the Nasdaq NDX Bull Bear key price level. The reason that you would want to have your chart open and expanded to the R2 through S2, or say R3 through S3, is because, just like with our SPX indicator, the beginning part of the session from the 9:30 open, typically in 95% of the 250 to 255 sessions or so a year, you're going to be focused on the bull bear key price level and the levels surrounding that. And then as time moves on throughout the session, if price happens to progress below S2 or above R2, then you can simply open up your chart more. So for example, on this chart here, if I had all the levels for that, you can see is here they're just too squunched up. So that's why you want to begin the session by having the levels from, say, R2 through S2 or R3 through S3, so you can see a more granular view of these key levels here, and also your stop loss levels that would be mostly in play during the beginning part of the session for trades taken off the bull bear key price level. So just like in our SPX daily key levels indicator, the default levels that you will see right out of the box with the indicator are the levels that you see on the screen now, which would be the NDX Bull Bear Key KPL level, which stands for key price level. Then you'll also have your pre-market low, your pre-market high, which is PMH, pre-market low, PML, YDC, which is yesterday's daily RTH session close, YDH, which is yesterday's RTH session high, and YDL, which is yesterday's RTH session low. As you can also see, there's a table for those here. And then you have a table down here for the R1 through R6 and S1 through S6. And just like in our SPX daily key levels indicator, both of these tables are optional, that you can leave them on or you can turn them off, or they're also independently controlled, so you can either leave one on and take one off, or vice versa. They are also independently controlled as far as the position on the chart if you do have them enabled, so you can independently move them to different parts of the chart if you prefer, for example, to have them in a different area besides what you see here. Also, just like in our SPX daily key levels indicator, the line labels are controlled by groups. So your main key levels are going to be the Bull Bear KPL, R1 through R6, and S1 through S6. Those are controlled by a group. Your midpoint levels are controlled by a group, and your QL levels are controlled by a group. Your PML and PMH are a group, and then your YDH, YDC, and YDL are a group. So you can control these independently as groups. And so what that means is that you can make the text size larger or smaller for the group on these line labels. Right now we have the main ones on the large text size, the midpoint labels on the normal text size, and then the QLs on the small text size. And then all of these PML, PMH, YDC, YDL, and YDH are on the normal text size. You can also control the offset by group as well. So you can move each group more to the left or the right depending on the offset. Here I have the offset set for the same for all three of these groups here, and all the same for these two groups here. But if I wanted to, I could move any group more over to the left or to the right. And you can do that in your user control panel to customize the display the way that you would prefer. And you can also control the colors of all of the lines as well independently if you prefer a different color scheme. Okay, so the key levels that you're going to get to begin with are going to be right out of the box the default display, the Bull Bear KPL, the QL above, the QL below that level, the midpoint above that level, the midpoint below that level, the S1 through S6, and the R1 through R6, and then all of these PML, PDH, YDL, YDC, and YDH. The other midpoints that you see that we have here were enabled by us manually for this particular session. So in the user control panel, you would simply go enable whatever midpoint levels or what other QL levels that you may want to turn on for other levels. So with this indicator, just like our SPX daily key levels indicator, you can take bullish or bearish trades off of any of the main key levels, which are the Bull Bear KPL level and the R1 through R6 and S1 through S6 levels. You do not take trades off of the QL levels or the midpoint levels. Those levels serve different purposes. The QL levels, as an example, are your tight stop losses on taking bullish or bearish trades off of any of the main levels. For right now, we just have the QL levels turned on above and below the Bull Bear key price level. So as an example, the QL below the Bull Bear KPL is the tight stop loss for bullish trades taken off the Bull Bear KPL level. And the QL above is the tight stop loss you would use if you're inclined to use the tight stop loss for bearish trades taken off the Bull Bear KPL. So if you were instead taking a bullish or bearish trade off of R1, then you could turn on in the user control panel the QL levels above and below R1, or above and below R2 if you were taking a trade off of R2, or S1 if you were taking a trade off of S1, or S2 if you're taking a trade off S2, etc. The midpoint levels serve many different purposes, just like the same way in our SPX daily key levels indicator. One of the purposes is they serve as standard stop losses on trades taken from any level. So for example, For a bearish trade taken from the bull bear KPL, the midpoint level above is going to be your standard stop loss on that trade, that bearish trade. And on bullish trades taken from the bull bear KPL level, the standard stop loss is the first midpoint level below. And that works the same way on all other levels as well. So for example, if you were taking a bearish trade off of R1, then the midpoint level above would be your standard stop loss, and then your QL above would be your tight stop loss. For a bullish trade off of R1, your standard stop loss is the midpoint below R1, and then your QL level would be the tight stop loss below R1. And it works the same way off the other levels. The midpoint levels also serve an additional purpose for gauging continuing momentum, and then also for reaching a 1.5 level minimum threshold for what we call a regular trade. Just like with our SPX daily key levels indicator, there are two different types of trades with this Nasdaq NDX daily key levels indicator. One is scalp only trades, and the other is what we term a regular trade. Scalp only trades, you're looking for a one level move in your favor to exit the trade, whereas with regular trades you're looking for a minimum 1.5 level move in your favor to either exit the trade 100% or to adjust your stop loss to break even, or start scaling out of your contracts by selling 70 to 90% of them and then adjusting the stop loss to break even or break even plus a profit buffer. So for example, a bullish trade from the bull bear KPL level, the R1 level would be your scalp exit because that's one full level above, whereas the mid R1, R2 is 1.5 levels above, so that would be your minimum 1.5 level move for a regular trade. Conversely, on a bearish trade from the bull bear key price level, the S1 level is your scalp exit, a one level move in your favor on a scalp on a bearish trade from this level. Whereas on a regular bearish trade from this level, the bull bear KPL, this mid S1, S2 is 1.5 levels below, and that would be your minimum 1.5 level move in your favor for a regular trade. Okay, so we're just going to go into the trades today. We have the data boxes from Thinkorswim for the ask prices on the close of our entries, as well as the bid prices on each of the candle closes where it's hitting our different target. Okay, so just like with the SPX daily key levels indicator, you have the 9:30 a.m. opening candle. In this case, in this particular session, we have this marked off here. So as you can see, today the opening candle opened below and closed below the bull bear key price level, so that is your bearish bias for the initial part of the session. This candle also closed within the acceptable range. If you're familiar with our SPX daily key levels indicator, we have a video on that indicator which also would apply to this indicator as well. In fact, all of the different videos that we have regarding the SPX daily key levels indicator V2.0 would also apply to this NDX, so it basically works all the same. And this what we have is a video which on the SPX 2.0 version, which describes 9:30 a.m. opening candle trades to avoid. And in that particular video, and also in the accompanying PDF document to that video, we talk about the acceptable range, what is an acceptable range, and what is the unacceptable outside of the range for the 9:30 a.m. opening candle. So you can refer to that. In this particular video, we're going to still have the links to the SPX topics on specific details and on specific topics about the SPX daily key levels indicator. All of those ones that you'll find in the Google Drive link in the description of this video apply to the Nasdaq NDX indicator as well. So we haven't had time to make separate videos for the Nasdaq NDX indicator for those types of other topic videos, but the same things would apply with this indicator as well. So you can refer to those different topics that are outlined on that Google Drive document for the other various topics about how to utilize the daily key levels indicator. Okay, so this 9:30 a.m. opening candle, that's your bearish entry signal, as it is within range, the acceptable range for a bearish trade off of the BB-KPL level. And just like in our SPX daily key levels indicator, you have 3 different option strikes that you can utilize on any bullish or bearish trade from any of the main key levels. The main key levels, again, that you can take trades on are the BB-KPL, the R1 through R6, and the S1 through S6 levels. So in this particular situation, on a bullish entry off of the BB-KPL, your standard play is an at-the-money option that is the closest strike to the level that you're taking the trade on, which in this case is the BB-KPL level. Now, Nasdaq NDX options trade in different strikes than SPX. So as you can see here, the NDX index is almost 25,000 versus the SPX index, which is around 6,700. So this is quite a bit more expensive to trade options on this index compared to the SPX index because of simply the index being a lot higher priced. Also, the Nasdaq index trades in 10-point increments, where as far as 10-point increments on option strikes, as opposed to SPX, which trades in 5-point increments on option strikes. So the closest option strike to this BB-KPL level of 24,842.89 is going to be 24,840. So that is going to be your standard at-the-money put option for this bearish play off the BB-KPL level. And how you figure out the other 2 strikes that you can use on this particular trade is you take the level you're taking the trade from, which is this, and the direction of the trade, bearish, so we're going to look down, and that it would be the first midpoint would be your level that would be the strike closest to this level. That would be your first out of the money option. So that's 24,771.77. So that is going to be the 24,770 put strike. The furthest out of the money that you can consider works just like in the SPX key levels indicator, and that is going to be 1 full level away in the direction of the trade. So that's your S1 level on this bearish trade from this level, 24,764, so the 24,700 put. Now here are the prices on the candle close. So as you can see here, we have the ask 135.50 on the at the money, 99.80 on the first out of the money, and 72.10 on the furthest out of the money. So keep in mind, these options are a lot more expensive than the SPX options. With that in mind, even though the at the money is the standard play still with our daily key levels indicator, because this Nasdaq index is so expensive, especially in the morning part of the session with the options, then you may want to consider one of the out of the monies more so than the at the money. But that's up to individual traders depending on the size of your account and what your risk profile is. So just as an example, $135.50, that means that one put option is going to cost you $13,550 for the at the money, or the furthest out of the money, 72.10, that's going to cost you $7,210. Now, as we get later on in the session and we get to our bullish trade later on the session, the prices get a lot more reasonable for all three of these options, as we'll see as we progress through finally getting to this trade after we go through this one. So the stop losses, as we mentioned earlier, you take the level that you're taking the trade from. In this case, it is a bearish trade off of this level, the BB-KPL. So your tight stop loss on this bearish trade is the QL above the BB-KPL, which is this level here. Whereas your standard stop loss is going to be this midpoint level here above the bull bear KPL. All right, so at 9:42, just a little over 10 minutes later, it does hit the S1 level here. It actually trades through it and closes through it. So on all of our levels here that we've got hit, we're going off of the candle close. Sometimes the candle close works to your favor, as it does in this particular case, and sometimes it does not if it backs off of the level. The main thing you want to keep in mind when trading with this indicator is that you either are going to base your exits on a candle close, or you need to base them on the touch of the level. The main thing is that you try to be consistent in whichever approach suits you better. So if you prefer getting out on candle touches of the level, then just keep that consistent and do that throughout. As we'll see here in one example here at the end here, when it hit the S2 level, it did have quite a significant bounce off of that level. So if you were doing a touch on this level instead, you would have had a lot more profit. However, just like here, if you got out on the touch here, you would have had a lot less profit than if you did the candle close. So there's pros and cons of each approach as far as your exits are concerned, but that's up to trader's choice. The main thing is just try to be consistent in whichever method you prefer to utilize. Okay, so as we stated, on a scalp, you're looking for a 1.0 level move in your favor. So we're trading from this level. We have a bearish entry. So one level down from that, from the entry, is the S1. So this is the S1 hit, 9:42 a.m. candle. Again, we're trading off of a 2-minute chart. That is the recommended chart time frame for both the SPX and the NDX indicator. However, the recommended chart time frames in general for trading this strategy are going to be between the 1 minute up to 5 minutes. So we found the 2-minute to be the best between that range. However, we do encourage people that utilize, that do buy this indicator, that they practice using it on a demo account for 25 to 30 sessions to begin with, to get used to using the indicator, get used to using the process of your entries, your stop losses, managing your trades and your exits. Some traders that are a lot more advanced and have a lot more experience may find that 25 to 30 sessions is too much, and they may be able to decrease that quite significantly. But the main, and then people that have not traded very much may need more than 25 to 30 sessions. But we do encourage you to trade on a demo account to begin with when you first get used to the indicator, and that really applies to any new indicator that you're using. It doesn't matter if you're buying an indicator from us, or if you're buying an indicator from another company, or even if you're using a free indicator. You should not put money at risk in a real live trading account until you have gotten used to the process of using that particular indicator. It doesn't matter if it's our indicator or someone else's, or even if it is a free one. Okay, so here we have the 9:42 a.m. one level move required for scalp. That's 100% closeout on scalps, just like with the SPX indicator. There's no adjustments. On scalps, you are simply closing out 100% of your contracts, whether you're trading one or you're trading several contracts. So on here we have, and we have the data boxes here. These data boxes up here are for the entries. They are the ask prices. Here are the bid prices on the close of the candles, as you can see here. And then these are the ask prices on the close of the 9:30 a.m. 2-minute candle. Here we have these, instead of going vertically, we have them running across. So here we have the 24,840s, 24,770s, and the 24,700s, just going from each one of these across. So the 9:42 a.m., the 9:44 a.m., and the 9:50 a.m. when it hits the different levels. So here the 28,840 was now the bid on the close, $203.20. So that is a profit of $6,770 per option. The 24,770 was $161.50. That's $6,170 profit per option. The 24,700 is $122.10. That is $5,000 profit per option. The 9:44 a.m. candle, as you can see here, hits the mid S1, S2 level. That is your 1.5 level move. So that is your minimum 1.5 level move for a regular trade, in which you have the following options: either 100% closeout of all your contracts, or adjusting your stop loss to break even, or break even plus a 10 to 15% profit buffer. Or if you're trading multiple contracts, then you close 70 to 90% of them, and then you can adjust your stop loss to break even, or break even plus a 10 to 15% initial profit buffer on the remaining contracts. It's important to note that, just like with the SPX daily key levels indicator, your entry stop losses are based on levels. However, when you get down and when you're doing a regular trade and you're making a stop loss adjustment, then at that time you're changing to a price-based stop loss, which is based on the price of the option that you paid. So if you're adjusting it to break even, then you would adjust it to the price that you paid for the option. However, if you're adding a profit buffer, then say 10%, in the case of this 99.81, then you would simply just round it up and make it $110 as an example. Or this one with 72, that would be roughly $7.20. So you could make it such as like $79.50 or $80 if you're adding a profit buffer. But here on this candle close here, as you can see, this candle close did also close slightly below the mid S1, S2 level. So the 24,840 put was $232 on the bid, $9,650 profit per option. 24,770 put, $181.20. That's $8,140 profit per option. 24,700 put, $144.50. $7,240 per option. Now, as you can see here, we have the 9:50 a.m. candle here, which is this green candle. As you can see, it hit the S2 level because we had this down candle on the 9:48 candle, and then when this candle started, it wicked down, hit the S2 level, and then had quite a significant bounce back up to mid S1, S2. So this is going to be one which we're going to show you an example of touch price versus the close price. So for example, this is considered the 2-level ideal minimum move On most days, you're going to see a max 2-level move in about 80% of the sessions where you're going to have normal or low to normal or medium volatility. On sessions where we have high volatility, that would be more like a 3 to 4 levels, and then on extreme volatility, 5 to 6 or more. And just like with the SPXV 2.0 indicator, the Nasdaq NDX indicator also can go up to 10 levels above and below. So it can go from R1 through R10 or S1 through S10. The default levels are R1 through R6 and S1 through S6, but you can turn on the additional levels should we enter into a market phase where we find ourselves in extreme volatility like we did with the COVID pandemic or the 2007-2008 financial crisis and real estate meltdown. Okay, so on the candle close here of the 28,840 put, 226.80, that's 9,130. Now you can see that's actually less than what it was here, and that's because the close of this candle is above where this one closed because it had such a significant bounce off of this level. However, on the low wick touch of this, it was actually 308.50, which would have been a $17,300 profit per option. The 24,770, same situation with this bounce up, 7,670 profit per option. However, on the low wick touch, 252.10, that's 15,230 profit per option. The furthest out of the money, 24,700, was 140 on the candle close, 6,790 profit per option. However, on the low wick touch, 207.80, that's 13,570 profit per option, which you can see all these here. So you'll see here, well, this is sort of getting in the way, but if I move it out of the way, you can see there the high 207.80. So again, these go across, so all these are the 24,840s, 24,770s, and 24,700s. Okay, so with this particular indicator, as we said, you can take trades off of any of the main R or S levels. So you could have actually tried a bullish play off of this S2 level here. We are not going to cover that in today's session, but you could have, because this candle here is still within range, the acceptable range. The acceptable range and unacceptable range not only applies to the BB-KPL level on the 9:30 a.m. opening candle, but it also applies to taking trades off of any of the other levels as well. So this is still within the acceptable range here. Again, we have a video on that. That video is in a Google Drive link. It is specifically talking about the 9:30 a.m. opening candle. However, it does apply as far as acceptable and unacceptable range. That part of that is going to apply to any bullish or bearish trade off of any main level. So that here is still an acceptable range. Range for a trade off of this level if you were inclined to take the bullish trade here. And if you did take the bullish trade, then your tight stop loss would be the QL below S2 and then the first midpoint below S2, which we don't have turned on, would have been your standard stop loss. And as you can see here, we had a scalp trade where we hit the S1 level, and then eventually you hit the mid BB-KPL S1, which would have been your 1.5 level move, and then here when it hit the BB-KPL would have been your 2-level move, and then here at the mid BB-KPL R1 would have been your 2.5 level move, then here at the R1 would have been your 3-level move from S2, and then eventually a 3.5 level move here. Okay, so the next trade, the 12:02 p.m. candle cross above, close above the BB-KPL here on this candle. Now, as we've noted here, that's within the acceptable range for a bullish trade off the BB-KPL level, but also the 12:04 through 12:16 candles are also within the acceptable range. So that's all these candles here are going back up to this candle here right before this big break. They're all within the acceptable range from here to this candle here. So if you missed this to begin with, you could have also ended here, 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 or even here or here on this bullish trade. Now these are going to be the ask prices on the close of this 12:02 p.m. 2-minute candle. As you can see here, as I mentioned earlier on in the video, these particular prices are a lot more reasonable. One reason they're more reasonable is because we've progressed through several hours of the session, so that you have the time decay factor on these 0 DTE options coming into play, versus in the morning you have the most time value built into these, so they're going to be the most expensive early on in the session. So here you still have 3 options, just like you did with the bearish play, and there's 3 option strikes for any bullish or bearish play off of any of the main levels. In this case, the level we're taking the trade from, the BB-KPL. So we look one level above here for our first out of the money, and then the full level above for our second out of the money. So the at the money play is going to be the 24,840 call in this case, because it is a bullish play. Then our out of the money second option is based on this level here, 24,914.02. So that is going to be the 24,910, because that's the closest strike. Remember, NDX trades in 10-point increments, so the next one would be 24,920. This is closer to 24,910. And then you have the 24,985.14, and since that's over the halfway point, since this trades in 10-point increments, then that would be the 24,990. Okay, so on the candle close here, the at the money 28,840 is $50. The 24,910 call is $18.60, and the furthest out of the money 24,990 is only $4.70. So one of these options would have only cost you $470. One of these options would have cost you $1,860. And one of these would have cost you $5,000. Your stop losses, same as the other trade, except in reverse. Now this is a bullish trade, so your tight stop loss in the bullish trade is the QL below. Your standard stop loss is the first midpoint below. Keep in mind that these stop loss levels on your entries are going to be the same. Since it's level based, it's the same whether you take the at the money strike or one of the out of the money strikes. Okay, so here at 12:36 p.m. it hits the R1 level. That is our scalp move, one level move in our favor. The 28,840 call option is now 151.30 on the bid on that 12:36 p.m. 2-minute candle close. That's $10,150 profit per option. The 24,910 is 90.40. That's $7,180 profit per option. The 24,990 that we only paid $470 for is now 42.90. That's almost a 10x. So that's $3,820 profit. Remember, your cost was $470. Now here we have a situation where we traded back down a minute. If you had a scalp, you're out of this trade. So you're out of this trade here. Remember, 100% closeouts on scalps. So if you're scalping only, you're out of this trade here. And one thing you have to keep in mind with Nasdaq is that since the Nasdaq options are so expensive, you may be more inclined to just do scalps on the Nasdaq versus regular trades. So that's up to trader's choice, but you just have to be cognizant of the fact that these options are a lot more expensive, even though here these were a lot cheaper. So with this, you could be more inclined to, especially if you bought this furthest out of the money for only $470, and especially if you bought several of them, and so you could scale out and just leave a runner after scaling out 70 to 90%. However, you have to keep in mind that here you're just scalping. So you're out 100% here, but if you were inclined to do the regular trade, you would still be in this trade. And so the reason I'm pointing that out is because we traded basically sideways to down for the next 2.5 hours here. So if you were in a regular trade, then you're going to have to make a decision as to, since these are 0 DTE options, as to whether you're going to stay in the trade until the end of the day or not. If you're buying, say, for 470 and not buying it for 5,000, then you could be more inclined to ride this out to see where it goes to the rest of the day to see if it hits. You just have to be cognizant of the fact that since these options are a lot more expensive, the at-the-money steal here being $5,000, that if you're not going to do scalps with the NDX and you're going to do regular trades, then you may want to consider only doing regular trades with the lower price options that may come into play later on in the session, such as the case here. Okay, so at the end of the day, we did get quite a move up. So you can see here that at the end of the day, the 3:52 p.m. candle, it did hit mid R1, R2. Obviously, since this is so late in the day, there's really no adjustments that you would be doing on this particular trade because there's only 8 minutes left in the session. So if you were still in this trade, let's say with this particular option here, if it hits that, then you just need to close it out. There's not going to be any adjustments on the regular trade because it's just too late in the session. The 24,840 option, when it hits this particular level, the 1.5 level move, 16,410 profit per option. The 24,910 call, 144.10 was the bid, 12,550 profit per option. So these are all here, as you can see. 24,990. 64.70, that's a $6,000 profit per option, starting with the cost of $470. Okay, so that's going to wrap it up for this video. Again, we just released this indicator today, the V2.0 version of the Nasdaq indicator. And if you are interested in purchasing this indicator, you can send us an email at daytradinggps@gmail.com to request a discount promo code. We are doing a special for Black Friday, so that we have a special promo code for this week only. That is for Black Friday. That is an additional discount than we would normally do. But if you send us an email to daytradinggps@gmail.com, we can send you that Black Friday promo code. The Black Friday promo code is going to expire this Saturday. after Thanksgiving. So if you do want to purchase it with that, you'll need to do it over the next couple of days. Okay, thank you again for taking your valuable time to watch this video. We appreciate you supporting our channel. And if you like the video, please hit the like button, as it helps us with the YouTube algorithm. If you would like to be notified of any new videos that we post, then please hit the subscribe button, and then you'll be notified when we post any videos on the Nasdaq indicator or the SPX indicator or one of our other daily key levels indicators, or when we post videos on other various trading topics. So again, thank you for your time, and thank you for taking your time to watch the video today.